Tesla's vehicle business is not doing so great. A few years ago, Tesla's management told investors that they expect the company to grow at a rate of about 50% each year. Not only is this not the case, last year Tesla didn't even grow. And this year in 2025 is looking like it's going to be another year of no growth and even some decline. Which is insane because Tesla is a growth company. Just look at their price to earnings ratio. Investors and Wall Street are betting on significant growth from Tesla. The past couple of years has been especially rough for Tesla. In early 2022, the Federal Reserve increased interest rates to fight inflation, making it expensive to borrow money. And this especially affects the car industry. Think about it. Let's say you want to buy a car. You're probably going to want to take out a loan and you're going to pay that loan off every month. Now, as the federal interest rate increases, so does the interest on your loan. And that translates to your monthly payment getting more expensive. So this is what happened. Basically, the federal interest rate increased and cars became more expensive pretty much all over the world, especially in the US. And this caused demand for all cars in general to fall. And as much as Tesla makes a really good car and their fleet of vehicles are one of the best in the world, they're not immune to this. And this is not the only factor affecting Tesla's demand. Some of the factors include overall lack of awareness of the benefits of electric vehicles. And also there's things like supply chain issues, macroeconomics, and lately politics. So reduced demand is one of the issues for Tesla. The next issue is untapped market. Take a look at this infographic. It shows each segment of the entire automotive market, and it also represents the total addressable market for Tesla's vehicle business. So Tesla already has vehicle models that cover most of these segments. The Model S and X cover the luxury segment. The Model 3 and Y cover the premium segment. The 3 and Y cost around $40,000 and they account for most of Tesla's revenue today. And Tesla also has the semi-truck and the Cybertruck, but all the way to the right is the low-cost category. This refers to vehicles at the price range of about $20,000 to $30,000. And this category accounts for 700 million cars of the entire automotive market. This is a huge chunk of the market that Tesla is not capturing because they don't sell a low-cost model at this price range. For a long time, Tesla was supposed to launch these new affordable models, but that still today is not here. So just to recap.
Let's just stop and analyze what's just happened there.
Tesla's vehicle business is not growing because of reduced demand due to inflation and other factors that I mentioned, and also untapped markets. So why is Tesla allowing this to happen? Why aren't they making new models to grow their vehicle business? The short answer to that is AI. Elon Musk realized somewhere along the line, many years ago, that the potential value in a large-scale full self-driving technology is enormous. He pivoted the company away from vehicle growth and in the direction of autonomy and the Robotaxi business model. So where does that leave us today, and what is the situation looking forward? In the recent Q1 earnings report, Tesla said, and I quote, "New affordable vehicle models remain on track to start production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be produced on the same manufacturing lines as our current vehicle lineup." Essentially, these affordable models are not going to be dramatically different or anything revolutionary, like the unboxed manufacturing strategy that Tesla is reserving specifically for the Cybercab. But rather, these new affordable models are likely going to be stripped down versions of the Model 3 and Model Y. It will likely only have the essential parts of a car, and its main purpose should just be to safely bring the occupant from point A to point B. Once again, these low-cost models are set to start production in a couple of months and should revive Tesla's vehicle growth, which is what Wall Street and investors want to see very badly. And then there's the Cybercab, and not to be confused with the low-cost affordable models. They are two different things. The Cybercab is specifically built for autonomy and is set to start production next year. And this should also significantly boost Tesla's vehicle growth. But the main star of the show, the thing that is supposed to bring Tesla to the multi-trillion-dollar valuation, is the Robotaxi and autonomy. And finally, after many years of developing full self-driving technology, Tesla is going to launch the Robotaxi service this June in Austin, Texas. And this Robotaxi service will use Tesla's unsupervised FSD. This will be a huge moment in the company's history, as it's kind of like a moment of truth. Tesla has essentially put all bets spending billions and billions of tens of billions of dollars on this AI business, which investors have been waiting for many years, and it's finally coming in June. It will start small with just about 10 to 20 cars to test the service, collect data, assess feedback, and address any pain points. Once they deem that the service is safe enough to expand, I imagine Tesla will rapidly scale these robotaxi services to other major cities in the US in the coming quarters. This upcoming robotaxi service and the production of these new affordable models will kickstart the next wave of Tesla's growth. And when the robotaxi service expands to other major cities and eventually other countries around the world, and the Cybercab starts volume production, that is when the real money starts to come in. In fact, I think the money will start pouring in, and I believe the stock price will reflect that. I think that's it for me. Take care.